Good evening, everyone. We are the Team 11 and we will be discussing the components of organizational control system. The organizational control system consists of 6 components, and these are strategic plan, the long-range financial plan, the operating budget, performance appraisals, statistical reports, and policies and procedures. Let's start with the first one. Strategic plans provides the basic control mechanism for the organization. When there are indications that activities do not facilitate the accomplishment of strategic goals, these activities are either set aside, modified, or expanded. These corrective measures are made possible with the adoption of strategic plans. Bago ang lahat, syempre sa first step muna tayo. Bago ka makabuo ng isang project, kailangan mo ng plano. And dito sa strategic plans nyo gagawin lahat ng yun. For example, may gusto kayong gawing building. Syempre, gagawa kayo ng plano, di ba? Pag-uusapan nyo yun, lahat ng mga main goals nyo. Dito nyo sa strategic plans, lahat gagawin yun. Proceed naman tayo sa pangalawa, the long-range financial plan. Engineering firm required longer-term financial plans. This is because of the long lead times needed for capital projects. From the word itself, long, kailangan ng pangmatagalang budget para sa goal mong structure. For example, yung mga trend, 'di ba? Pangmatagalan 'yan na ginagawa. For example, yung PNR ngayon na ginagawa sa likod ng bahay namin. Ang tagal nilang gawin, lahat ng kailangang gastusin dyan, lahat ng mga bahay na maapektuhan, kailangan nilang bayaran. In short, kailangan nila ng madaming pera para makayanan nila yung pangmatagalang structure at mabuo yung gusto nilang mabuo na structure. Yan, kagaya ng LRT. Let's proceed to the operating budget. Indicates the expenditures, revenues, or profits planned for some future period regarding operations. The figures appearing in the budget are used as standard measurements for performances. Dito, binabudget lahat ng mga expenses na gagamitin para sa structure na gagawin. Next one is performance appraisals. Measures employee performance. As such, it provides employees with a guide on how to do their jobs better in the future. Performance appraisals also function as effective checks on new policies and programs. For example, an equipment has been acquired for the use of an employee. It would be useful to find out if it had a positive effect on his performance. Dito naman, masasukat yung galing mo sa trabaho. Kung epektibo ka ba sa tinoka sa yung project, at kung for example may bagong equipment sa site, paano mo siya matuturo na maayos sa mga workers? The next one is statistical reports. Statistical reports pertain to those that contain data on various developments within the firm. Among the information which may be found in a statistical report pertains to the following. Dito naman makikita lahat ng mga data or information na nangyayari during the construction, yung mga pinapagawang projects, ganun. Including yung labor efficiency rates, quality control rejects, accounts receivable, accounts payable, sales reports, accident reports, power consumption reports. Ayan yung example ng statistical reports. Let's proceed to the last one, policies and procedures. Policies refer to the framework within which the objectives must be pursued. A procedure is a plan that describes the exact series of actions to be taken in a given situation. Gaya sa ibang kumpanya, syempre, kailangan pa din natin ng disiplina. Hindi mawawala yan. Kaya, Diyan pumapasok yung policies and procedure. Policy: whenever two or more activities compete for the company's attention, the client takes priority. In procedure naman, may step-by-step din tayo susundin. Just like yung, yan nasa PPT, basahin nyo na lang. And the next reporter will be John Gozon.
Strategic control systems. To be able to assure the accomplishment of the strategic objectives of the company, strategic control systems become necessary. These systems consist of the following: financial analysis, and financial ratio analysis. Strategic control systems para ma-identify kung tama o maganda yung result ng strategy that you choose. Financial analysis. The success of most organizations depends heavily on its financial performance. It is just fitting that certain measurements of financial performance be made so that whatever deviation from standards are found out, corrective actions may be introduced. A review of the financial statement will reveal important details about the company performance. Ang financial statements ay mahalagang kasangkapan na ginagamit para masuri ang kalagayan ng isang kumpanya, ang kanilang pera or budget. Kasama dito ang income statement, balance sheets, and cash flow statement na nagbibigay ng impormasyon tungkol sa kita, gastos, ari-arian, utang at galaw ng pera. Sa pamamagitan ng pagsusuri sa mga dokumentong ito, nakikita ang kita, likwidasyon, kakayahan sa pagbabayad ng utang, at kabuuang kalagayan ng kumpanya sa pera. Financial ratio analysis. More elaborate approach used in controlling activities. Under this method, one account appearing in the financial statement is paired with another to constitute a ratio. The result will be compared with the required norm, which is usually related to what other companies in the industry have achieved, or what the company has achieved in the past. When deviation occur, explanation are sought in preparation for whatever action is necessary. Ratio analysis is isang pamamaraan ng pagsusuri ng mga numero sa mga financial statement ng isang kumpanya. Dito, pinapares ang kaugnay na account upang makabuo ng mga ratio. Ang mga ratio na ito ay ginagamit bilang batayan para masukat ang performance ng kumpanya. Halimbawa, maaari mong ipares ang accounts tulad ng current assets at current liability para makuha ang current ratio. O kaya naman, ang net income at total asset para sa return on asset. Pagkatapos, iahambing ang mga ratios na ito sa mga pamantayan ng industriya sa dating datos ng kumpanya para magkaroon ng batayan o norma. Ito ang liquidity, efficiency, financial leverage, profitability. Liquidity ratios. Assess the ability of a company to meet its obligation. The following ratios are important indicators of liquidity. Para lang po sa inyong kaalaman, liquidity is the availability of assets to a market company. Then, current ratio. This shows the extent to which current assets of the company can cover its current liabilities. The formula for computing current ratio is as follows. Current ratio is equal to current assets all over current liabilities. However, acid test ratio, this is a measure of the firm's ability to pay off short-term obligation with the use of current assets and without relying on a sale of inventories. The formula is acid ratio is equal to current assets minus inventories. Then efficiency ratio. It shows how effectively certain assets or liabilities are shown used in the production of goods and services. Among the more common efficiencies ratios are inventory turnover ratio, fixed asset turnover. If efficiency ratio, ito naman yung nagpapakita kung effective ba yung assets and liabilities na gagamit ng isang company. Then, inventory turnover ratio. This ratio measures the number of times an inventory is turned over or sold each year. This is computed as follows. Inventory turnover ratio is equal to cost of good all over inventory. Then, Fixed assets turnover. This ratio is used to measure utilization of the company's investment in its fixed assets, such as its plant and equipment. The formula used is fixed asset turnover is equal to net sales all over net fixed assets. Then financial leverage ratio. It is a group of ratios designed to assess the balance of financing obtained through debt and equity sources. Some of the more important leverage ratios are as follows: debt to total asset ratios and time interest earned ratio. Debt to total asset ratio. These ratios show how much of the firm's asset are financed by debt. Debt is utang, as we all know. It may be computed by using the following formula. Debt to total asset ratio is equal to total debt all over total asset. Then, time interest earned ratio measures the number of times that earnings before interest and taxes cover or exceed the company interest expense. It may be computed by using the formula. It is equal to profit before tax plus interest expense all over interest expense. Then, profitability ratios measures how much operating income or net income a company is able to generate in relation to its assets, owner its assets, owner equity, and sales. Among the more notable profitability ratios are as follows. First is profit margin ratio, return on assets ratio, and return on equity ratio. Then let me enlighten you about this. Profit margin ratio. This ratio compares the net profit to the level of sales. The formula uses as follows. Profit margin ratio is equal to net profit all over net sales. Then return on asset ratio. This ratio show how much income the company produces for every peso invested in asset. The formula uses as follow. Return on asset ratio is equal to net income all over assets. Then the last one is return on equity ratio. This ratio measures the return on the owner's investment. It may be arrived at by using the following formula. Return on equity ratio is equal to net profit all over equity. And that's all. Uh, Again, we are Team 11. Thank you for listening.